Recording in
Hey traders, this is Scott. Welcome to the live room. So if you're new here, pay attention to the information in this video. We don't always go through all this stuff in class, so you will pick up some pieces here if you'll pay attention. So I got to do this, this disclaimer. As you know, trading involves substantial financial risk. And this presentation, also our live room, is for educational purposes only and is not intended to induce anyone to initiate any investment or trade. Your trading results are entirely your responsibility. So who is this guy who's speaking? That's me on the left down there. I'm the co-founder of ProAct Traders, as is my partner, Jerry Rankin. I handle the live room and videos and tutorials, all the methodology, that stuff. Jerry handles the technical support and R&D and constantly coming up with software and software additions. I have over 2 decades of trading and training experience. I was a Forex training consultant for FXDD. They were the second largest broker in the world at that time, and I did that for 3 years. I am also the author of The Empowered Forex Trader, Strategies to Turn Pains into Gains, and it's available on Amazon. There it is. All right, so we are here Monday through Thursday in the New York session. Monday night, we're here also in the weekly Outlook room. We take a look at what might be a problem for this week, what to look for, and then we're going to look for our swing trade called the real estate of the week trade. And our traders make hundreds, if not thousands of pips off that, should that materialize. We are closed on Friday because Friday is Square Up Day, and all retail traders should be flat in the market on Friday in the New York session. So why are you here? Well, our 20-year history with traders is you're here to replace or supplement your income. Some to retire, some to elevate their lifestyle, some to augment their lifestyle, but we are here to help you get through the steps it requires to become the trader who achieves that goal. It is not a get-rich-quick proposition. It is an evolution. So what do we do here? We teach price action, not indicators, and the methodology used by the big boys or the bankers to manipulate the market to their agenda and then send that information to knowledgeable traders around the world. We are part of the knowledgeable traders around the world. We created our own set of charts that show this methodology extremely well. This enables our traders to decipher that agenda message and use that information to create a trading plan for today. We trade only if we have a wide open space of 55 pips or more to the target. Education never stops here, and our motto is no trader left behind. So why are we different? Our business model is different. It's based on trader retention. Our methodology is different. We are target traders, not scalpers, and many of our traders make hundreds, sometimes thousands of pips every week. Our live rooms are interactive, a place you can really learn. Our charting software is different. Our chart template comes pre-set up and has multiple time frames simultaneously, including Heikin-Ashi charts. Has momentum signals that identify actual money entering and exiting the market. Has special moving averages and a MACD and T3 to identify optimum trade areas, and has target tools available nowhere else. What are your results, you might say? Yes, we now have traders who are professionals. Our record is taken live and tabulated by a third party. It is published on our website. Seeing it is knowing you are in the right place. You will see that in the live room. You will also see that we as a group count only a small portion of what our traders actually accomplish. So we'll do pip captures after we look at the market, but our results are taken from actual trades our traders executed using our methodology and our software. We only count the one largest trade that each trader made, and that is divided by the number of traders who took it. And we must have a minimum of 3 traders in order for us to be able to count it. So you can see here, like Daniel right there, 4 positions. We would only count the 112. Daniel, there are 4 positions. We'd only count as 36. Notice up here, GJ, K, we'd only count her 116. But what did she make? 2,882 pips. As I said, hundreds and thousands of pips in this room. You'll see it. All right. Execution by our traders was due to an opportunity that we identified either live in a session recap or a heads-up alert that was sent to them via the info center. We press our winners without exception, so you will see pip captures like I just showed you. We take opportunities only if we have a wide open space of 55 pips or more. We always press our winners. We use lots of entry orders. We will show you how to find these juicy spots based on price action in the charts. We trade live. We don't show you trades after the fact. Yeah, you could have got in here, man. No, we show it to you live. We first eliminate all the pairs that cannot give us a return on investment today. We will review all the clues that make certain pairs ripe for cherry picking. We will alert live what the trade setup is, typically a pull, a breakout, and pullback opportunities, and areas that you can press your winners in. Enter when ready means that most, if not all, the entry conditions have been met. We do not call trades. The decision to make a trade is 100% yours. Enter when ready means enter when you are ready. Very important. We always press our winners without exception. And that means that you must place your second trade of today's plan before you take a market order for your first trade. We call this a snowman. Trade 1 is in the head, trade 2 is in the body. Minimum wide open space is 55 pips or more. Looks like this in the charts. Trade 1, a break resistance, break hook and go with 1/3 of our lots with 3 times the technical stop with a market order. Right there's the break hook and go. All right. All right. Trade 2, break the next barrier, enter with 2/3 of your lots with an entry order. Trade 1 is then moved, the stop is moved to break even, and we manage all trades once in profit by moving stops. Our goal for you, 65-35. 65% win ratio. By the way, that means you lose 35 out of 100 trades and a 35 plus average pip capture. If you can do those 2 numbers, you are sustainable for the rest of your trading career. You need to trade only micros until you get close to those numbers. What about stops? We always trade with real stops, not mental ones. We have a special stop policy that allows us to trade with those big boys in their arena, but with our smaller accounts. We will show that to you live. Entries always are an even number. Stops always an odd number ending in a 3 or a 7. Option contracts use a 5, so we don't want to mess with those boys. We are here to teach you to fish. If you give a man a fish and you feed him for a day, you fed him for a day. But if you teach a man how to fish, and then you have fed him for a lifetime. Our focus is twofold. Use a live trade to teach trade execution. Help traders move to their personal next level so they are in the journey to replace or supplement their income. Where's the trade? Where's the trade? Where's the trade? All right. At the many trades we identify may start in this session, but usually do not finish in this session. By the way, if we get one that does, I'll make a special video of it because it's very rare. That does not change the trading opportunity if the dollar index is still provable. We will then do a session recap video at the end of the session for our worldwide subscribers that is posted in the Info Center, the IC, and also in the Academy. Do you send trade signals? No, we are not a signal service. We do, however, send heads-up alerts to our subscribers via the Info Center. These are trade ideas, areas that I've looked at and said, man, if this goes, it could be good. That does not mean it's a trade signal. They are potentially actionable ideas, but you must qualify them based on your criteria. Typically, I send 4 alerts per day, Monday through Thursday, at the New York fix. You need to know where that is in your time zone. And alerts are membership specific. They look like this. You'll get a buy or a sell. You'll get the currency. You'll have an entry price, a stop price, and a limit. Those are general areas. They're not signals, remember. And then what do you got to do after a break hook and go? So let's do a little housekeeping. No swearing in the chat or risk being dismissed. No sound, just log out and come back in. Please use your real name in the chat, not Big Daddy Forex or the Pip Dude, etc., etc. We are a family, and as such, we use our real first names. If you're new to target trading, there are no dumb questions. We record everything, and this recording will be available in the Academy in about an hour after we close the room. So if I said something, you go, man, I'd like to hear that again. Well, you can. Just go take a look at it. We allow no discrimination of any kind. We have all races, nationalities, and religions here. And by the way, we all get along. So please keep all negative comments out of this room. We do dismiss people who do that, so just a heads up. You will initially learn 4 entry strategies. The number 1 trade to learn is the pole trade. We'll show it to you in class, all right? We find a rectangle or a flag, and then we have a specific way to tell what it's going to try to do. So it's the number 1 trade to learn first because you can earn while you learn. You'll then learn some strategies for entering a trade, break, hook, and go, close and reverse, and before you enter, let it center. We also have a 6 aces reversal setup. It's for more accomplished traders and should not be attempted by a novice trader yet. Wow, it's kind of overwhelming. Yeah, but it's a process. First day's here. Be a sponge. Just listen and watch. Right? Ready to jump in? Start with the first videos course in the Academy. I wonder why we called it the first videos course. If you're a beginner, tackle the beginners course in the Academy. If you're ready to try our amazing charting software, just sign up for a demo. The Academy opens up from beginner level up to fast trackers, and there are 15 separate courses in the Academy. Our trade today, if we find one, will be filtered by the ATR, or the average true range. Membership options include the ATR in the IC. It looks like this. The average ATR is the average daily movement in pips for each pair. We use the 14-day column because Wilder, who invented it, said that's what you do. But we have the ability to compare. So you can see right here, Aussie New Zealand, right? All right, it's currently doing 6 pips a day. That's what we'll use for our target. Last week, though, it was doing 57, so it's a little stronger than last week. But in the bigger picture, it's slightly less than it's normal. But in reality, overall, in the course of a year, it's running right where it's supposed to be, 66, 68 pips a day, all right? So it's a very powerful tool that allows you to identify a valuable target and also determine whether you have a target that you can even trade today. Do I have enough room? So our first qualifier is, do we have at least 55 pips to the ATR target? If we do not, we pass on the pair, all right? And why? Because we cannot press our winners. There is no room. The secret to being successful in the Forex is pressing your winners without exception. You can't do it with less than 55 pips. So we're going to go in the charts now and take a look and see what we've got for today. So I'll see you in the room in just a second.
Good morning, everybody. This is Scott. Hopefully everybody's doing great today. Morning, morning. Everybody here? Check, check, check. Testing, testing, testing. Testing. Test, test, test. Check, check, check. Anybody there? Check, check, check. Oh, wait a minute. I know what it is. Hold on. My fault. All right. There we go. Now I'll try. There we go. Oh, okay. That's better. Sorry, my fault. I forgot to turn on everyone. So there we go. Okay, well, as you know, it's a dead day. It's a U.S. Bank holiday, so the market will stay pretty quiet because half the participants are gone. And because of that, traders don't want to make any, don't want to take any positions at all. So we're not going to take any. But I'm here for you guys just to answer questions, what you might have trading questions, fast track questions, charting questions, whatever. I'm here for you. All right. So, if we don't get any questions, it's going to be a short meeting. But I want to take advantage of this with those of you who are in the open house because, today and tomorrow are it. In the last 2 weeks, you've been in the room. And hopefully you're going to come away with a whole different perspective of how the market actually moves. All right. So, questions? Anybody? There are no dumb questions. No, it won't be Andy. Again, today's a holiday, so I'm actually, normally I wouldn't even be here either. I'll be enjoying. We don't get very many holidays a year, so normally I would be enjoying the holiday also. Yeah. That's a good idea, Andy. Oh, there you go. All right. So let's talk about real estate of the week. All right. So it's a swing trade, and we're looking for a big area that the currency might run in, and then we're looking for a currency that has the ability to go ahead and run it. So by default, that means we're using higher ATR currencies. All right. Now, that doesn't mean that you can't find them on the smaller ones. You can. All right. So we're looking for high ATRs. Okay. So we've got Euro Aussie, and we got Euro New Zealand. Euro New Zealand, and we got Pound Aussie, and we got Pound New Zealand. All right, so those will be plenty right there, those four. All right, so let's take a look and see what the Euro Aussie has to give us. All right, let me put this down for a minute. All right, so Euro Aussie. All right, there's not much here. It's just a big sideways movement, as you can see. In fact, I'm just going to make it a little bigger, but I'm not going to take it away. All right. Now you see the whole thing. And we get this fib for the big move. Yep, see, they know them. That's what you're looking for. You're looking for confirmation. You don't know which one to click on, but when you click on it, something's got to tell you that's the numbers they're using. You can see right up in here, they're using these numbers for sure, right? Right there. You can see down here, they're using that number for sure. See? So, that's what you go with. And they use it again over here, and they use it again over here. See? All right. And again over here. That's to start with it. All right. Now, there's no room. We only got 100 pips left down there on this range, so we won't use that one. Let's go see about the Pound Aussie. And I'll go up here to a 240, take a look at it. Ooh, this one might do it. Yeah, this is a big area. Hold on. Get rid of this stuff in here. And we'll rework it. I'm going to pull this fib all the way down to here. All right, then I stop. Are they using the lines? Do they use the lines? Are they using the lines? Do they use the lines? You see that? Now I know that these lines are good down here because they tell me here that they are. All right, so there we go. So this is a pretty good area down here. Let's go pull up the calculator. That's just a simple matter of space, simple math. We're currently at 92.67, 92.67. And the bottom down here is, we'll call it 8,500, 8,500 equals 767 pips. That's worth it. That's what we're looking for, an area like that. All right, so let's work this one up. All right, we need a move over in here or up here to get the channel on. This is too steep, as you can see. So you're either gonna have to have a sideways move or a move and then a pullback to give us that channel to the downside. But even so, we have a top in place, so we can use the HSI. And remember, the HSI measures the Elliott waves before they happen. These are the targets, and you can see they know where they are. They know where they are. They're going to know where that is. They're going to know where that is. Why? Because they know what the Fibonacci sequence is, and because they know it, then we got to know it. All right. So let's take a look at it. All right. All right. So there it is. 21, 34, 55, 89, 144, and 233. So now you see why we look for 55 pips, because it's part of the Fibonacci sequence. If we have 55 or more pips, then we know the bankers have an opportunity because they're going to run the pips. All right. We have T30s on there. That's what the 34 pip is. It's an interim target en route to the 55 and the 89. 89 is what the average currency does every day, and 144 is the average big currency does every day right now. Get big ATRs in the summer, or I mean in the winter, like we should have right now, 233 pips. All right. So you got to memorize this. This is something you got to know. All right. Now you say, well, I don't have that. I'm on MP4. I don't have this HSI. Okay, then fine. Go put it on. You gotta go down 55, 89, 144, 233, 377, etc., 684, whatever, the 987. All right, that gives you those numbers from the top. All right, you have to do it on every chart. Do it manually. All right, you can do it. All right, we did it for years. All right, let's go down to 240, nothing there. Let's go to the 60. Okay, now maybe at the 60 we can get a channel on here. It looks like we might be able to. Let's try it. Yeah, heartline is proven. See, so what you got to do now is when you put a channel on, it has to prove the heartline. You know, an MP4, that means you're going to have to use Andrew's pitchfork because the channel does not have a heartline. Don't ask me why. As you see, you've got a flag pattern working right now, and let me get rid of this. That's the ATR for today. All right. So we don't need to know where the ATR is today because we're not going to trade it today, but we do need to know where the targets are. So I'm going to go from the swing, take a fib extension from the swing high to the swing low, back up to the swing high on the gap right there. And as you can see, they know the line. So they're going to know these lines going down. All right. So now I got two sets of fibs on here and an HSI. Do I need anything more? No, I don't need to complicate this thing one bit. All right. So now I'm going to go back up to that 240 and we're going to plot how we would trade it to the downside. So you can see that this is the whole trade right here. It's right there. Okay. And the spaces here, this is trade 1 area. This is trade 2. This is trade 3. And I'd hold that to here. This is trade 4, big wide open space, and 5, big wide open space. All right. So you find these levels and you put an entry order in and you do it now. All right. Entry order you can leave that one for now. This one right here, this one right there, this one right here, and this one right here. You put them in now. Now, the whole key to trading one of these is trade 1. When you get trade 1 here, its job is to do only one thing, is to produce profit. All right, and that profit will cover the risk of that trade, that trade, that trade, and that trade if you hold it. If you bail on it, then you start all over again. All right, so that's how it works. All right, so trade 1, 2, 3, 4, 5. All right, that trade right there, if it goes to target, will make you a couple thousand pips. All right. For instance, last week we made 315 pips. Not a good week trading, but we did eke out 315 pips. All right, traders did. Now, if you're a 5 to 8 pip trader, in order to make a net of 315 pips in a week, you've got to make over 60 trades in a row. 60 trades in a row without any losses to equal that. Is that remotely possible? It's possible. It's not probable by any stretch of the imagination. All right. So you got to be 100% right for 60 trades in a row. Probably not going to happen. Probably not going to happen. And that's why you have to have the paradigm shift. Right? So I like this one. We'll make this real estate of the week. All right. What's going on? My keyboard's not working. What the heck? Hold on a minute. Oh, it's working over there. Working on it. I don't know. Try it again. There we go. I don't know what was going on. Real estate of the week down. There you go. All right, there you go. So that's how you do it. All right, now you can sell it, go do the other ones, and I don't want to spend the whole time on this. We've got one. There's no room here. You're in the bottom of the channel anyway. All right, and pound New Zealand was the other one. And pound New Zealand. It's got a pretty good spot, but it's not as big as that. Yeah, as a pound Aussie. Pound Aussie is much bigger. All right, so this is how you would do the same one here. You know, okay, we got a channel on here, and use this one right here. Bigger. So you can see it does. It's not proving the heart line real well. So I'm going to go drag this out to here. And there we go, right in there. All those candles right there, those candles right there. See that? Now, how did I know to move that? The heart line told me that. So if you don't have a heart line, you don't have it, all right? Let me take this off here and we'll put a new fib on here. What you're trying to do is you're trying to get the information. Where is the information, all right? Before I ever do anything, I got to gather the information, all right? Over there, and sure enough, they're using them really nicely, in fact. All right, there we go. All right, so now I got a top up here. I can find the HSI from the top. Just click it on the top. There we go. And you can see they know the lines, they know the lines, they know the lines. Okay, so they're going to know this line down here. All right. So now here's your opportunity. So I'm here by myself and go, whoa, wait a minute. I could trade this as a real estate of the week trade. That's correct. You could. All right. Now remember, on a real estate of the week trade, you still trade your additional positions. You trade them as intraday trades. So in other words, the risk of today, let's say you're in a trade and you say the risk is it's going to go back up on me right now. All right. Because they need a pullback. All right. Well, then I would bank all my lots except for trade one. All right. Leave trade one on or break even or maybe slightly above that. All right. And the reason you want to do that is because if it's going to go down here, it's going to put in lower highs, all right, which means it won't get back to that trade one. Lower high, lower high, lower high, lower high, all right? So it won't get back there, and each one of those highs is a pullback, and the pullback is your friend. And the pullback gives you the opportunity to add a position. That's why it's your friend, all right? Pullbacks are your friend, all right? Now, for most traders, it's not their friend because they're selling at the bottom and living through the pullback. They're buying at the top and living through the pullback. See, that's what they're doing. So what traders do is they raise their stop. Oh, I have a 30-pip stop, man. I'm going to raise mine to 50. I keep getting stopped out. And their thought process is I've reduced my risk. The reality is you just increased your risk by 40% by doing that. Well, that's not the way to do it. But we don't think clearly in there because if we're buying at the top and we're buying and selling at the bottom, whose fault is that? That's ours. Right? And we don't want to blame ourselves for making a mistake. We want to blame the market. Right? Well, the bankers, they took me out. That's what the broker did again. He took me out. That's denial. Right? No, you took a trade you shouldn't have traded. Now, you know, every once in a while you're going to take a trade and you're going to get stopped out. Yeah, that's the way it goes. Yeah, it's called trading. So, good job, Andy. Thank you. That was a good idea. All right. Anybody else? Questions, 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 questions. You bet. That was a good, great deal. Anybody? We do have two brand new fast trackers for Wednesday. For those fast trackers in here, hopefully they'll. I know one of them has already introduced himself in the Telegram room. So, yeah, or you could use it wherever you can find a top. I mean, if you can find a top on a 10-minute, as long as it's the top or the bottom, yeah, you can do it. All right, but yeah, the easiest one is to do it up here on the 240. So that brings me to a point. The 240 is the chart where you determine the structure. All right, so we can look at this one right here. And we can say, okay, the structure is down. MACD points down. I got a channel down. All right, so the structure is to the downside. All right, and are they making lower highs? They are making lower highs. Therefore, the structure is down. All right, see that? All right, now, just because I have the structure on here, I need to know where the structure is trying to go. All right, so that's why you put the big fibs on from back here, and they'll show you immediately, yep, we're using them. What you want to find is the lines, the numbers that are important to the bankers, not to make pretty charts. All right, it's so that you can say, I know that the bankers know that line. I know they know that line. That means I know they know that line. I know that we're going to know this one. So en route, wherever the target is, that becomes a barrier or a bounce point. And because of that, that's the only place you move your stop. That's why you move your stop when you have a mathematical reason to do so. All right. So once you got that all figured out, then you go down to the 60-minute chart where you live. This is where we live, and the bankers live here too. And now we're able to figure out from here what's left. Okay, what's left, if anything. All right, if I have 55 pips or more, I have an opportunity potentially. If I don't have 55 pips, I don't have one because it's a rule. Why is it a rule? Because the secret to being successful in the Forex is pressing your winners. And unless I have 55 pips, I don't have enough room, minimum, I don't have enough room to press my winners, all right? Which means I don't have a trade because I have to press my winners without exception. That means every single time, all right? And, in the beginning, when you're used to coming in, used to being a retail trader, just running in the market, grabbing 5, 8, 10 pips and jumping out, all right, then that's totally foreign to you, all right? It means you have to start using entry orders. Well, 85% of your trades need to be entry orders, 85%. All right, so how do I get to 85%? You start with the very next trade. That's how you get to them. Put the entry order on, all right? So you're looking for the wide open spaces, all right? So you can see that this pulls back, you'll then have this wide open space, all right? If it breaks through here, you'll have this wide open space, moving your stop here, all right? If you break in here, you'll have this little wide open space, see? All right? What tells you that? The chart tells you that. I can make a decision whether to trade it or not, all right? So I just need to know where the target is today. Well, that's pretty simple. We just pull up the ATR, and I want the pound New Zealand here, 140 pips, all right? So 140 pips, we find the 5 o'clock candle from yesterday. It's right in here, 1600, right up here. Oh, that's it, right there. And we go down for 140 pips, 140. All right. See, now I know what's left of the trade. All right. So today, all that's left is this little bit. Do I have 55 pips? No, I don't. If they pull up to here, will I have 55 pips? Yeah, I will. All right. What did they do with the information on the break and the hook? You see what they did? Big candle. They entered. Why? Break, hook, break the barrier. We're in a wide open space. This is uncontested, and down they go. All right. We're looking for uncontested areas, all right, to trade in, and we're looking for the contested areas to move our stops. See? That makes sense? It's actually pretty simple if you think through the process. A market order is when you go over there and say, click me, take me in right now. That's a market order. An entry order is where you go figure it out. It's either a buy limit, sell limit, buy stop, or sell stop. All right. So a sell stop, right, is if you break this line right here, and let's say the target was down here. If you break that line, do you want to be in right there? If the answer is yes, you go in and you put a sell stop in your broker station for whatever that price is there and for how many lots you want on for that target. That's what you do. When a sell limit would be, okay, if this comes up to here like this and makes a turn, do I want to be in? I want to be in right there. So you put a sell limit in there, and if it hits that price, it takes you in instantaneously. Right? So you're not clicking it in, you're pre-programming your broker station to do the work. All right. And that's 85% of the time, Faye. See? So 85% of the time, that's what you're looking for. So if I'm looking for a pullback and I'm looking for a close in reverse, like that right there, I'm looking for a close in reverse. I would find where I find that top of that candle where it should stop, and then I place a sell limit for that trade right there. See, and you'll get it at the highest point. And why do I want to do that? It's because of risk and reward. All right. So remember, the decision to make a trade is based on reward for risk. All right. So if the currency were to come up here like this, here it is and there would be the opportunity. If it were to come back up here, all right, draw it back up here, I would put a sell limit here because that's where they should come back to. All right. Now, if they hit my price, they take me in. But the reason I'm doing that is because there's going to be tens of thousands of traders who are going to do the exact same thing because bankers trade with entry orders. They figure it out. That's where we want to take it in. That's how, when they pull it back, all of a sudden it takes off and goes down. Why? Because that's where they put their entry orders for the continuation. Everything in the Forex is about continuation until it's no longer about continuation. You're at the bottom or the top. Right? Then now they go the other way. Think about it this way. It's like football, rugby, anything like that. All right. There's a playing field. All right. Up at the top here is a goal. Down here is a goal. All right. If the Bulls who are running this way, if they score, the Bears get a chance to score. And this is what happens all day long. See there? Here's Thomas, 75, 59, 40, 21, minus 12, still in for the target. Nice job, Thomas. Still, there's an example right there. So Thomas is a fast tracker. You can see pressed his winners. He's got 5 positions in here, and he's still waiting for the target. All right. So 59 pips, 2 lots in there. That's 120. 75 pips on the first trade. That's 195. 40 on the second. That's 135. 235. 21. Add that, it's 247, and then take away 12 pips. Right? So he's already in and up 240 pips, folks. Almost what we did last week. And he's in one trade on a Monday. Crazy, huh? So there you go. So for newbies in here, the way you learn to do this is not me talking. It's not watching a video. It's you going into the charts and saying, I don't see break, hook, and goes. I don't see ABCs. I don't see what he's talking about, right? And so you decide which one of those you want to work on, because you need to work on them all sooner or later, and you start the process. Okay, so I don't see break, hook, and goes. Okay, go down to a 10-minute chart, find all the breakouts, and look for the break, hook, and go, and keep a track of it. All right. So it's very important that you keep track of it because you need to know the statistical probability. All right. So here's one right here. Doing it. Here. Oh no. You can make this real simple, right? Just one big old pad of paper right here. All right, here they are. He's doing Fibonacci retracements. Okay, how far do they go back to? And what did he find out at the end of doing 300 of them? All right, 91% of them retrace to the 618. All right, now how would you use that? All right, so you've got fibs coming in here, right, like this. All right, 3 fibs. actually 214 down here too. All right. So this is the 214, 382. On top of that is the 50, then 618. Actually, there's another one up here, 786. All right, 91% went retraced back to the 618. So you get a movement like this, and then all of a sudden it says, we're out of seller. Where are we going? 91% we're going to the 618 fib. All right. Where would I put my sell limit? 91% of the time, you'd put it at the 618 fib. See, that's how that information then gets turned into a methodology that you can use. All right. All right. And you say, well, yeah, but what if it turns down here? Then you don't get it. You don't get the trade. All right. All right. What if it turns into 214 and goes down? You don't take the trade because you have no reward for risk. The 214 has no reward for risk. All right. So you never trade the 214. But if it comes up to the 382 and turns, you'd be interested in that. Or comes up to the 50, that's a 50% discount. You trade that. But 91% of the time, they're going up to the 618. Right? See that? That's the data you need in order to become a trader. Right? You need to know that. Right? So, you know, how do I practice that? Well, you go find all these pullbacks. See, these are all, that's why you use these charts over here. You go over these charts over here where you can just play with them and not mess up your trading charts. And you can go find an area where they're doing pullbacks. Okay. So you just go up here and you just start putting them on. All right. I got a right here. 786. All right. Got one right here. That's 100%. All right. Right there. That's a big sideways move there. All right. So where we get out of a sideways move. There we go right here. All right. Clear everything off of here. All right, move one and pull back right there. All right, so pop a fib, swing high, swing low, 618. Turned on a dime and went down. Look at that. See that? All right. And you get 300 under your belt, all done at one time. Then tomorrow, if you did it today, tomorrow you don't do that exercise at all. All right, your brain needs to sleep and it needs to build a highway to the folder that it put 300 fib retracements in. Now, fib retracements are the number one thing to trade. Right? Why? Because they do them all the time. Right? In order to get the currency to go down, they have to do pullbacks to entice sellers in. So the pullback is the incentive for everybody to re-enter the market or to come in for the first time. See? So that's your opportunity. All right. So do I need to learn how to do it? Yeah, because they do pullbacks all the time. Pullback, pullback, pullback. All right. Any move, you're going to see pullback. Why? Pullback, pullback, pullback. Lower highs. See that? All right. You put a line on there and you say, oh, I wonder if they knew that line. I think so. You know? All right. Here's a pullback, gives you a target. A pullback gives you a target. A pullback gives you a target. All right. So there you go. I can't trade unless I know the exit. Remember, make it a rule. Never make an entry unless you know the exit. Make that a rule. And you know, in the beginning, it'll be weird to you. But you'll get so used to it that then all of a sudden you won't be able to go back to the old way of just jumping in the market and jumping back out. All right. So it's a process. You can't learn to trade in 3 weeks, so get that out of your head. It's not going to happen, all right? But it can happen because there's no rocket science here. There's absolutely no rocket science. It's all very logical and sensible. And because the bankers are using the math, we can use the math. So they have an agenda and they have to give the clues in the chart to what the agenda is, all right? And you can, once you learn how to read a chart, you can see it like crazy, all right? So this was a descending wedge. That's a clue that we're going down, all right? These pullbacks to lower highs and the close and reverses were clues we're trying to go down. See, that's it, all right? This is how we came into this. This is how we're coming out of this, all right? They typically are equal, all right? Then MACD told you, you better take this. You're below the zero line break, all right? See? And MACD is the only indicator that you can rely on, and it's only right. You know, on our charts, it's 82%. On MT4 Trading View, it's only 66, which is still pretty good, by the way. So you got to trade at 65. All right, so 66 is pretty good, but 82 beats the snot out of it. All right, anybody else? Nobody? Only a half an hour here today? Come on now. You can take it. You can't trade today. Just get that out of your head. I can't be trying. I don't even have my broker station up. I don't, it's shut down. I don't have it open today. All right. Nobody? Still trying to be a sponge. That's the way to do it, John. That's the way to do it. Okay. I'm not here tomorrow. I'm having a procedure in the hospital. It's not exactly the right time to join your family because I'm not feeling very well. Brain is not focused on trading, but my unwell body. I will be concentrating on getting well in the next couple of months. In the meantime, perhaps I will keep watching your videos and sign up for a demo to keep my trading fire going. I really wanted to join. This open house fired me up again. Perhaps your offer for the senior discount will still be available then. You and Jerry are exceptional people. Thank you for everything. May, let me down below here. May the Lord bless you both and your families. Yeah. So those of you who are, you know, praying type, you might want to lift them up and pray for them. JT, okay, that's a great question. All right. So first of all, in order to understand these moving averages, we gotta understand averages. All right. So a simple illustration is this. All right. Average of 1 to 10 is always 5 because it's static, it doesn't move. But a moving average, what it does is there's a candle here, and then there's another candle here, another candle, and it follows the candles. So as we add a candle down here, we get rid of one here, add another one here, we get rid of one here. But this line is already established, all right? So now, all right, when you have a line like that, you have more sellers than buyers. If you're above it, you have more buyers than sellers because that's the average, okay? So if the average is right there, right, which is why a heart line is important, right? See? All right, because the heart line is the average of the channel. All right, so averages are very important. All right, now on our charts, all right, let me go down here to a 10-minute chart. All right. On our charts, the moving averages here. All right, so remember the red one here. See how flat it is? Just almost straight line across there. All right, that means the market is ranging. All right, when we're below that, the red one is a 240-minute chart brought down to the 10. In other words, if I was on a 240-minute chart, this is what that moving average would be doing up there in the 240-minute chart. All right. So Jerry found a way to bring that information down here and put the 240 here. All right. The green one is the 60-minute. These little ones you see in here are 30-minute. All right. So you can see right here that based on that, all right, I have in a 240 world, I have more sellers than buyers. Right tool. I have more sellers and buyers in the 240 world. In the 60-minute world, I have more sellers and buyers in the 60-minute world. And in the 30-minute world, I have more sellers and buyers in the 30-minute world in that area. Do you see that? All right. I have more sellers than buyers. That means I want to be a seller. I want to be a seller. All right. Now, it's a big sideways move, but when you get into a currency that can rock and roll, you know, pound Aussie or something like that, you know, let me pull it up here, pound Aussie, where are you? Right here, right? You get back over in here where you're rocking and rolling, see? All right, so I'm on a 10-minute chart. Remember, they were coming out of an up move into a down move. Look how much it took to do that. Wow, all right? All right, so this is the part we call the desert, all right? Because in the desert, you still have more buyers and sellers on a 240 potentially, but you have more sellers than buyers on a 60. So this is a dangerous place right here, right? Doesn't mean you don't trade there. You just realize that I have more risk. But once I know I have more sellers than buyers, right? More sellers, more sellers, more sellers, more sellers, right? There you go. MACD pointing the way. This is why when a T3 and a MACD cross like that, that's why on our charts it's 82% going to go that direction, because the T3 is a special type of moving average, and it's very responsive to the market. So when that occurs, you know that you're below, you have more sellers than buyers when the MACD crosses in the T3 below it. You have more sellers than buyers. Do you want to buy it? No, I'm only a seller. That means you have an opportunity. It just means you now know what you are. I'm a seller. I am a seller. And when the market rock and rolls, it's below all the moving averages, or going up, it's above all the moving averages. See that? So this up move here, I have more buyers and sellers on a 240. I have more buyers and sellers on a 60. I have more buyers and sellers on a 30. All right. And then right here on the pullback, it changes. All right. And where do you think that is? That's probably a 618 fib. Let's check it. All right. Going low right there. Oh, it's a 786. Wow. So there you go. Up they go. You think they knew the target? They knew the target exactly. They knew that target back here. See? That's the purpose of putting them on. And that's why you got to change. If you're using the stock fibs on MT4 Trading View, you got to change them. All right. While you're here, get them changed. Right? If you're going to keep those charts, if that's what you're going to do, all right. If you're going to do that, then what you need to do is change the fibs while you know what they are. All right. They're in the academy under software. All right. Go over there, find out what they are, change those things so that you know these are the fibs for the Forex. All right. The fibs that are built in to all stations, including ours, all right, because it just was ported over from the stock market. The standard settings on most fibs are for the stock market. It does $176 billion a day. Wow, that sounds like a lot of money. Not compared to $8 trillion in the Forex. It's a drop in the bucket. That's it. You know, a billion is 1,000 million, right? A trillion is 1,000 billion. Yeah, there you go. Wow, that's a lot of money. A lot of money. All right, hopefully that helped you. All right. Anybody else? Yeah, it's Wednesday, Thursday, and Friday, Erwin. Wednesday, Thursday, and Friday, we will not be in the room. Tomorrow is the last day of the open house, all right? Because we're going to be in fast track after that, right? And by the way, if you still want to get into fast track, if that sounds like it's right for you at this time, then now's the time to do it, because there is a big discount on it. Right? There's a big discount. Might never be that big a discount ever again. Tomorrow is the last day. And really you need to be in today because you got stuff to do before we start on Wednesday. You got charts to get up, got an IC, so you can get access to the correct rooms, all that sort of stuff has to be done. All right. So there we go. On the IC here, you see, go down here at the bottom, and there's right here meetings right there. So fast track training, see, that's where we'll be on Wednesday. All right. Yeah. So you got, and the only access is here. We don't give this out. Don't give we don't send it out. Nothing. You have to have the IC to get in. All right. So there we go. All righty. Anybody? Any questions? Should I close it up? It's up to you guys. Here's a gap. Do all gaps get filled in the Forex? No. They only get filled 78% of the time. That's it. Something you need to know. So you got to know the statistics. And if you don't know the statistics, then you're just guessing. And most traders are guessing. How do I know that? Because I used to guess. That's how I know that. So hold on. hold on. All right, so statistical probability, all right? What about gaps? If you come down here, right here, it'll tell you that on any currency here, the average on day one of a gap being filled is 71.41%. On day two, it jumps to 77%, and by day three, it's 78. But it's not 100, all right? So the maximum it does is 78%, all right, which means 22%, almost 1/4 of the time, it never fills the gap, all right? So there's a gap, all right? They did fill it right down in here, right? In this case, that one got filled, all right? But they don't have to be, all right? Well, JT is called top-down analysis, and there's a video called The Currency Ritual in the Academy you might want to watch, okay? So you have to come up with a ritual that makes sure. Hold on a minute, I got to take this call. I'll be right back to you. Hey, this is Scott. So that's the appliance repair guy calling to set up an appointment. Yeah, amazing. Oh well, yeah, it's been 20-some years, so it did pretty well. Where are you now? South Fifth. Okay, so back to JT. All right, so the thing you do, you start up on a 240 chart, right? And you've got to determine where you think the currency is going, all right? So you can see this is a high probability of going down. MACD tells you you're headed down, all right? So what that tells you, you're going to need the fibs off of this from the swing high and the swing low, all right? So now that becomes a judgment call, and after 300, you won't ask which one, all right? So you come up here and you go, and you start up here, and you go from the swing high to the swing low down here. And so that's why you only have to find this line. You don't actually have to find the candle because that is the bottom down there. All right. Then once you put them on, you stop. They got to prove to you, yeah, we're using that line. We know that line. We sure know that one. We know that one. We know this one. See that? So now you know. Now you're pretty convinced that that's correct. All right. And then you then go down to the 240. Now, if if we had enough room to put a channel on here, the HSI. Let's just keep this simple. Now. We go off that down to the 60-minute chart, and now we need the 1,000 fib. All right. So this is again a judgment call. Where do I go from? All right. So I can do this one right here, swing high, swing low, and back up to the swing high. I can do that one, and it's immediately they say, "Yep, that's the one we're using." Okay, good. Now I know where the 1,000 is. See, all right. But it's finding those legs. Now, is there another one? There's another one from here down to here and back up to here. All right. So, and they're not using that one. See, they're using the other one. It tells you right away. Don't use that one because we're using this one. And so that's how you learn not to put that one on, but to leave this one because it tells you. All right. Does that help you, JT? Okay, good. Arwen, my GJ and G confirmer chart disappeared. All the others are fine. Any thoughts? No clue. Most likely, what could be right here is if you put it behind here like this, it could be down here like this. See, and you won't see it. You go, I don't see it. Well, it's gone. So just put this one down and say, oh, there it is right there. Pull it back up. Most likely, that's where it is. If not, you're going to have to call Jerry. I got to pull this one up. So it knows where to go after you put it back. All right. And this is why you can't do this on MT4. See, these are all different time frames, all right? Different things running, all right, to create them. Okay, yeah. And they're all different time frames. And this is why we had to create our own charts because you can't do it on MT4, TradingView or things. We didn't have TradingView in those days when we started. We only had MT4. That was it. So anyhow. All right. Anybody else? Yeah, Well, you know, they're designed to give you the information you need to be a trader as a retail trader, right? Charts that come from a broker or anybody else are designed by coders who are given a set of instructions. Make sure this is on the chart. They're them no clue why. It's just an order, and they fill the order. They don't know, and they don't know anything else, nothing about trading or whatever. Right? So when we began the process here, we found that that there was information that we needed that we couldn't get, right, from the charts. And so we set out to find a company who would do it. Went to eSignal, and all we had those days was Thinkorswim, eSignal, TradeStation, and MT4. So we went to all of them, and eSignal and TradeStation said, "Yeah, we'll do it for you, but it'll cost you $1 million to build charts like that." Oh man! And then we found XTIC and Arthur. Never met him. We shook hands over the phone, and we've been working together for over 20 years. And he said, "I'll do it. I'll do it for you." And that's how we did it. When you sign up for a demo, you'll get access in the charts. I mean, in the academy, you'll get your charts first of all. You'll get the IC, which you can have right away. You can have that whether you become a demo trader or not. But it won't have it will not have the ATRs in it. Right? But if you become a trader, then of course all that's included. That's part of what we do. All right, let me go to Academy. All right, there, and I need to log in. It'll pop up here. Come on, that's slow. All right, log in. There we go. So you'll be in the bronze level right here. All right, and so the login's there. The weekly outlook would be here, the live session recording. So if I said something today and you say, "Man, I need to hear that again," you can go and you can watch it right in there. The beginner's lessons, the first videos lessons, and the software. That's where you would go to find the fib settings. Right? So you come down in here. These are little courses. So as you go, through them, it'll take you to the next one that you haven't done. All right. So let's see here. How to set your fib tool correctly. See? So there you go. There's an instructional video. Here are the settings right here, Erica. See that? There's the settings. You need those numbers. You're not going to use our charts. If you're going to use our charts, you got to use those numbers anyway. And if you're not, you still need to use these numbers, or you're not using fib numbers. You're using stock numbers. All right? And they don't use the stock numbers. Stocks do because it's a dog, but not when you got a cheetah here. Okay? So you get all that when you're a demo trader. And there's tons to go through. The beginners classes a lot, and the first videos, there's a ton of videos in there. I don't know, it's probably altogether in those, what you got right there, probably 40 videos. 40, plenty to watch. And each one is a little piece of the market. All right. It's for 10 days. And it depends. We do it manually because if you came in on a weekend when we have to get 10 days over another weekend, it's basically we set it out for 10 days and then we'll adjust it. If we hit a weekend and you haven't got your 10 days, then we add it to the other side. So 10 days is plenty for somebody to do it. And the other thing to remember is we're paying for the data feed. See, a demo is free to you, but it's not free to us because I got to pay to put those candles on the charts. So we have to pay for it. And because of that, we have to limit demos. We have no choice. So. Yep. All right. Anybody else? Easiest one to remember is info at ProAct Traders. Info. It's easy to remember. It's Scott.Barkley at ProAct Traders too. This little dot between my name. But info is only 4 letters, easy to remember. We will be here tomorrow, don't forget, we will be trading tomorrow, but Wednesday, Thursday, and Friday is devoted to nothing but fast trackers. Right? So, and Erica, as we get up in our age a little bit more, I'm 72, almost 73, that, we got to keep our mind active. Got to keep that brain working, right? Sitting on a couch with a remote is not going to get it. And, learning to trade and trading is fantastic because it makes you use your brain. Right? That's it. I'm 73 and I take a Spanish lesson every day on my phone with Duolingo. So I spend 15 minutes every day learning Spanish. Right? I know a lot of Spanish, but I want to be good at it. Right? So, and if you don't keep it going, you lose it. So. All right, looks like that's it, everybody. Unless there's a last minute question, I'm going to close it down. No trading today. You can trade tonight, but not today. Yeah, there you go. Good. All right, everybody. Don't forget, if Fast Track is right for you, you need to get in today to get all the software downloaded and ready for Wednesday. All right, so it gives you a whole day in case something doesn't go right. All right, so there you go. All right, everybody, I'll see all of you tomorrow. Take care. Remember, no outlook tonight. All right, so there we go. Yeah, there you go, Mike. All right. You bet. Talk to you soon, everybody.